Hey Cryptoverse, welcome to this episode of Crypto Baptist. The show highlights everything about institutions getting into crypto. Today is September 16, 2021, and I'm your host, Dan. So a lot of activities this week. I have a lot of content to go through, so let's get right in. Fidelity had a private meeting with the SEC to push for the approval of the Bitcoin ETF. They want the public to be able to get exposure through Bitcoin, and some would prefer it in the Bitcoin ETF structure. So hopefully this helps the SEC and Chairman Gensler leaning towards the approval of the Bitcoin ETF. Franklin Templeton is getting knee-deep into crypto. They're launching a $20 million blockchain venture fund to invest in crypto startups. Coinbase is filing for application with the Futures Commission merchant so that they can offer futures product or tradings in the future. Bitwise is filing for a Bitcoin futures ETF. Now this one will give you exposure to Bitcoin, but through ETF products and funds. It's not going to invest directly in Bitcoin. So it's not like a Bitcoin ETF that holds Bitcoin. And by the way, I'm surprised that they would file this. I mean, if a Bitcoin ETF is coming, there's really no need for a Bitcoin futures ETF. IBKR is following up on their statement of allowing crypto on their platform. So pretty much now, I've tested it. You can buy crypto on IBKR. They have the lowest commission out there. I mean, one of the lowest. It's not the lowest, but it's very limited in what you can trade. You can trade Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. But it's a good step moving forward. Now for us, the question is, when will Fidelity and Charles Schwab get on board? It's not a matter of if, but when. Ernst Young, the accounting firm, is going to business with Polygon, the Ethereum layer 2 technology, and they're going to integrate Polygon onto EY's blockchain project. Looks like this is more of a experiment. In my opinion, EY is experimenting with blockchain for accounting purposes and for consulting purposes. But I would have to wonder if there is a need for blockchain in this space. A typical database or Excel should be fine. I don't think you would need blockchain in this space. But it's great that EY is trying and experimenting in this space. That shows that they're not scared of trying something new and innovative. Chairman Gary Gensler testified earlier this week, and he had a prepared statement. You can read it here, and he did bring up crypto assets market. He's looking into the offer and sale of crypto tokens, crypto trading lending platforms, and funnily, he calls stablecoins stable value coins, and investment vehicles providing exposure to crypto assets or derivatives and custody of crypto assets. That's good that he wants to engage in this space, but it's kind of, weird, because he says here that he wants to engage and develop regulation around this space, but then we saw the tweet from Brian Armstrong of Coinbase saying that they are not even willing to engage on the topic of stable value coins. They're just calling them securities without even engaging with them and talking with them. Here, Mr. Gensler is saying that there's no doubt that some of the exchanges are offering securities, not just tokens. Now that he says it, he needs to back it up. He needs to engage with the exchanges to establish further guidelines so that we can move forward. MicroStrategy is not missing a beat. They bought an additional 5,050 Bitcoin at an average price of around $48,000. I think the total cost was around $242 million. And now MicroStrategy has about 114,000 Bitcoins in their treasury. Okay, on to the hedge funds. Brevin Howard, a $20 billion hedge fund, is setting up a digital arm to invest in cryptocurrency and digital assets. Here they are saying that what initially started out as a fad now appears to become a more permanent structure of the financial landscape. So they're definitely not going to miss out on it. Kevin O'Leary is doubling his portion of crypto in his portfolio from 3% to 7%. And the reason why I highlight Kevin is he runs his own ETF and he's pretty much on the institutional side. So to see him doubling the amount of crypto in his portfolio is a very bullish sign. He's definitely here to play it safe, and he's somebody that's very risk averse. So he would always look at the downside first and prevent it. And for him to double his investment means that he sees a low risk here. And then we also have Steve Cohen backing a crypto quant trading firm. I don't know how to pronounce this, Radco. But this is not his only investment in crypto. He's definitely he dipped his feet in and now he's getting knee deep in. Morgan Stanley is also expanding their cryptocurrency research team. And ARK Invest Kathy Wood was at the SALT conference this Monday, and again she reinstated her stance that if institutions allocate about 5% of their funds into Bitcoin, then Bitcoin can see $500,000 in the next 5 years. So far, we're not seeing much adoption of Bitcoin from the S&P 500 companies. Hopefully that changes in the next 5 years. Ray Dalio he confirms that he has Bitcoin now, but he also threw some shades in there and said that if Bitcoin becomes successful, it will get killed by the government. Bitcoin had an upgrade earlier this week, quietly, but is setting up for the Taproot upgrade coming up in November. Fidelity Digital Assets arm released a survey from their institutional investors. So they looked at about more than 1,000 institutional investors in Asia, Europe, and the US regarding digital assets. Here are the highlights. I won't go through all the points, but we're heading in the right direction. The numbers have increased from their 2020 survey. So now 52% of the surveyors said they are invested in digital assets. In Europe, 84% of high net worth individuals surveyed are invested, and a 20% increase from financial advisors. And then nearly 8 out of 10 investors surveyed felt that digital assets have a place in the portfolio. And 43% of investors surveyed identified digital assets as part of the alternative asset class. And some of the barriers to adoption, the main one is the price volatility, and then followed by lack of fundamentals to gauge the appropriate value. This is a new space, new asset, so it's not surprising that they don't understand how to value it. And price volatility is definitely there, but with institutions coming in, that price volatility should decrease in the long run. And then lastly, for the educational piece, Bitwise published this nice dissection of Bitcoin related equities. It's a nice read. They did a great job looking into miners and other crypto related companies that are in the stock market. All right, definitely a busy week. Hopefully you guys have a nice weekend. Take care.